I made over 300% in profits by trading this one simple fair value gap strategy. If you really want to keep it simple and not overcomplicate your trading, then this video is for you. In this video, I'm going to show you exactly how you'll enter trades and what tools you can use if you want to catch trades just like this. Then make sure to stick around. First things first, if you're completely new to trading, I recommend you watch some of the previous how to trade videos in this playlist, because we're going to be combining a lot of concepts to make a fully profitable trading strategy in this video. So there are three things that we're going to need to consider when taking a trade with this strategy. First up is the trend. You'll only want to trade in the direction of the higher time frame trend. We'll want to stay out when that trend is unclear. This is how we determine our bias of whether we're looking for short or long opportunities. The second thing is fair value gaps. These imbalances are our areas of interest. Basically, when the market retraces back to this area, it will be an opportunity for us to get in a trade in the direction of that higher time frame trend, which is critical. Lastly, we're going to use support and resistance as areas to enter our trades after the market has reached the fair value gap. If you want to make this easier, there are indicators out there that can help you. If you're going to use one, I would recommend the fair value gap indicator by 𝐂𝐴lgo. So now we're going to show you step by step how you can identify a trade opportunity by using these three concepts that I mentioned earlier. First, start out on the higher time frames like the weekly or monthly chart. Taking a closer look, we can see that this chart has been in an uptrend. It was previously downtrending, but it came to an important level and started reversing to the upside with a lot of energy. Next, we'll want to identify a fair value gap on that same higher time frame that has made a higher high, indicating the uptrend. You'll want to watch out for fair value gaps that are near current market price or just below. Once price has reached the fair value gap, you'll want to zoom in to a lower time frame. For this example, I'll use a 4-hour chart. Here we can see a series of equal lows, which is an additional piece of confluence for our trading idea. Typically, people will have their stop losses just below these lows. We want to wait for it to trade below the lows into the higher time frame fair value gap. Once it moves up with these large energetic candles, you'll wait for the candle close above the most recent swing high. This confirms that our trend on the lower time frame is beginning to align with the higher time frame trend, which is bullish. So once these highs have been broken through, it turns from resistance into our new support level. We'll enter here with our stop loss just below this low, and we're going to target the highest high in this local range to maximize profits. Let's look at this in a different way. Here we have the gold daily chart, and we can see that this market is also in an uptrend, as seen here where it's clearly made significant higher highs. When we take a closer look, we'll see that this fair value gap has not been traded through yet, and the market is coming down to fill that gap before continuation. So once price has reached our higher time frame FVG, you'll zoom into a lower time frame once again. Here we'll wait for the exact same thing as we did earlier. It's that simple. Once price has reacted from the FVG, look for it to break past a swing high with a candle close above. This confirms the lower time frame to be bullish as well. The lower and higher are now in agreement. Now you'll want to enter at the retest of the high, and again, this was previously a resistance level. Once it's been broken through, it becomes our new support level. So we'll enter here with our stop below, and you can target the highest high of this local range. Next up, we'll look at an example where we'll only be using one time frame to take a trade. Now, I recommend using the 15-minute time frame or higher if you plan on doing this. In our case, we're going to use the hourly. Let's go over our strategy once again. The very first thing that we want is to identify the trend. Without the trend, we have no trade. Because for high probability trades, we want to take them in specific directions. This is how we determine our bias of whether we should look for longs or short opportunities. So by taking a look at this chart, what stands out? To the left, we can see that there were equal highs right here. Just above them, we have another swing high that has not been taken out by the market yet. So this area is where liquidity is likely to be resting. We can see that the market ended up taking out all the liquidity before making a move back down lower. Then it started to retrace back up to fill in the imbalance right here. The market then respected the area and continued to go lower, breaking the swing low and showing that it is a retracement, not a reversal. Now that it's trading below these lows, this area has become resistance. With this information, we can determine that the correct trend is bearish. So the first criteria of this strategy has been met. Next, we have to check if the market has created a fair value gap. Whenever the market retraces back to this area, it will be an opportunity for us to get in a trade in the direction of the local trend. So here we can see that the market broke the swing low with a lot of energy, as the size of the candles during the break is much bigger than the green bullish candles. Our second criteria for this strategy has now been met. This shows us additional confirmation of the trend and where the momentum is. We can see that the previous support level, which has now been broken through, is lining up with the new bearish fair value gap. This makes that area even stronger and has a higher probability of making a successful trade. Now, for the last step in this strategy, we're going to be looking for a support to resistance flip. We want to wait for the market to respect the bearish fair value gap and move down lower. Here we see that it has broken through the support. So now all of our criteria have been met. All we have to do now is wait for a retracement back up to this support that has flipped into our new resistance. Enter once that area is reached. Just set your stop above and target levels lower. I have one more example for you, but stay with me if you really want to digest and understand how this strategy works. So here we can see a downtrending market, as indicated by a sequence of lower highs and lower lows. So what do we do in a downtrending market? We look for shorts. We want the market to respect the bearish fair value gaps so that we know there's still more downside ahead. Once price reaches it, you should wait for a reaction and gauge it. As we see here, it does respect that fair value gap, and it starts to move back down lower, breaking the previous swing low, indicating that there's likely more downside coming. You can enter here on a retest, confirming resistance. Set your stop above the high and simply target levels lower. If any of this was confusing, I recommend you check out the rest of this playlist. This video is more advanced and relies on a lot of the knowledge featured in the videos before. And if you know another trader that might benefit from this, please share it out to them. Don't forget to smash the like and subscribe, and in the comments below, let us know what concepts you'd like to see covered next.